Well, how wrong can I possibly be? I've been saying we're going to have a moderation in inflation because I can see the price of energy coming down. I can also see some of the prices of wheat and corn and lumber, of course, has come down. But the CPI came out today and it was hot, really hot. Let me go to my next slide. Let's just talk about that and see what is going to happen here. So I thought it was going to be declining because if you've been to the gas station at all, you know that the price of gas has dropped pretty significantly. Here in Arizona, we're looking in the $3 range. I think it's going to go below $3 soon. But for August, 8.3% inflation rate, that's pretty doggone high, even though energy declined. Food and shelter, particularly shelter, went up significantly and really rang that up. So let me look at my next slide. Here's the culprit to it. As you know, we have shortages across the country for housing. We just let in 1 million people come across our borders. Whether you like it or not, they all need a place to live. Now we have a huge 3 million shortage of homes. Now it's going to be even worse. And the builders here are starting to slow down because they're scared. They're seeing an economy start to collapse. They don't want to build anymore. So no more supply coming in. So where's everybody going to live? Well, the prices of rentals are going up. Look at this. It's not even slowing down. It just keeps going up. It went up a full percentage point nationally from July to August, 5.6 to 6.7, better 1% nationally. Now, in the hot markets like, Florida, Texas, and Arizona, I mean, you can't hardly find a place to live. So you know the rents are going to go up even more. So this has been a real problem. Uh, Continue to see this happening. So rent is going to be high for a long time. I think we just kind of need to get used to that. And rent is in the CPI. So that's one of the things they haven't changed. They haven't made it easier. So rent is shelter, and it's a direct component of, I think it's like 25 or 30% of the CPI. So when rent continues to go up, you can see the CPI is going to go up too. We've had some other things in here that just aren't good. They're not going the way we had hoped that they would. Now, when you see the rates come out at better than 8% CPI for August, you know that that's going to guarantee a hike rate increase. So you know they're meeting at the end of September here in a week and a half or so. They're talking about 0.75%. Don't be surprised if they don't go up a full 1%. In which case, it's going to just beat the living daylights out of the economy. Demand destruction is certainly underway. They're going to make it harder and harder for you to purchase a property. But keep in mind, when it's costs more and more money to own a property, that's going to drive rent even higher, because everybody wants a return on investment. And this is one of those areas where we really, really need that. So a lot of people are moving into it, but the costs go up, costs get passed on. You just have to know that this is going to happen. So what can you do about it? So let's go to this next slide and see. It's not going to be as good as what we like. I don't think it's the end of the world for a lot of this. This is my major concern. If you are employed, you need to really look at your employer and make sure that the employer is stable, because there's going to be layoffs, there's going to be firings, and you need to make sure that your company is stable. And if you're in a good, stable company, you need to make yourself invaluable. Make sure that you're doing a really, really good job and that people want you to hire, because they are going to get rid of it. Because we just got this from Zero Hedge for August. This is the newest survey for the Empire State Manufacturing Survey. And of course, Empire State, that's New York. They're a huge manufacturing, huge industrial, huge mercantile and financial. One of the great districts of the United States. They dropped 31 points in 1 month from July to August. Look at this drop. Just fell off a cliff. That's before these rate increases have really taken effect. And so if we have 1 more percent or 0.75%, 0.5%, whatever they raise this increase, it's going to even make demand destruction even worse. It's going to guarantee that business is going to slow down. So business is going to be bad. You need to be aware of this and make sure that you're protecting yourself because things are going to get tough for probably 6 to 9 months. There will be an end to it, of course. I don't think this is a cycle completion in the real estate industry. I've thought about this pretty bad, pretty thoroughly. I don't think so, but it can be pretty severe downturn coming at us. So let me just talk about that for a second here, and let's just go through that. Um, Here's what concerns me because a lot of my clients are baby boomers, and I've been talking about purchasing power. Now, once you retire, your major source of income, which is your job, goes away. You have to now depend on what you've saved, what you're getting from Social Security. If you're fortunate enough to have a pension fund or retirement account, that's it. You're done. You have to live on it. You're not going to be adding to that. Now, I know you see a lot of seniors are at Albertsons and Safeways and Ralph's and at Ace Hardware and Home Depot, and they're picking up 15, 20 hours a week, but they're not getting anywhere near what they had in their full blown careers. They're just trying to supplement some money, and they are losing purchasing power each and every month. And we just got this from Zero Hedge again. They're talking about adjusted wages. So wages have been going up. Wages have been doing very, very well, but wages compared to inflation have lost for the last 17 months in a row. So even though you're getting an increase in your pay, inflation wipes it out beyond what the increase was. Same with Social Security. I think the Social Security got like a 3.2% increase for the year. We're up over 8%. So you lost 5% of your purchasing power. How does that work? That's not a good thing. So you need something that inflation adjusted. So you need to talk to your financial advisor. Tips might be something you want to talk to. I'm not a financial guy. I'm an expert in real estate. Well, I have pretty good depth of understanding with a lot of the different asset classes. But talk with them. If you want to start thinking, maybe you want to get hedged, there's such things as natural resources and precious metals, agriculture, energy, oil, of course. But my asset class, like real estate, has all those things to it, but gives you an income. So I'm kind of beating my own drum here. But if you're a retiree, this is tough. And if you're working still, you need to protect your purchasing power, your wages too. So I've been talking about this. We've been talking about this month after month after month after month. Actually, almost 2 years because if you look at my videos in November of I think 20 or 2019 or 2020, I said you could see inflation coming into the pipeline. You could just see it coming into the PPI. And it just got worse ever since. And then we did $10 trillion in stimulus. What do you expect is going to happen? So we've got inflation. I think we're going to have it for a really long time. If you look at one of my videos, I think that the US dollar is going to cost us. It's costing. We have inflation right now with a really strong dollar. When you have inflation with a really soft dollar, now you've got enormous inflation. And I think that's what we're looking at here. You need to make sure that you protect yourself. Now, I've been saying all along that you need to buy 2 properties. You need to have your home and 2 rentals. Now, if you don't own your home now, and you're a first-time home buyer, this is an absolutely outstanding time for you to do that. People are going to be scared to death, particularly if we get this increase. People are going to say, "Oh my gosh, the world is ending," and they're going to do nothing. The world is not ending. This is just going to be a period of time we're going to go through. And this is going to be a great opportunity for you to do this in front of inflation. I don't think that we're having a cycle completion. I think we're having a correction. Now, if you're in some of those major markets, and I'm going to pick on Boise, Idaho, because it's one of the ones that have appreciated the most in the United States, I think that they could see a significant downturn in prices. Florida, Texas, and Arizona, not so much. Now, here in my home market of Phoenix, we have so much industry coming here. It's just enormous. We have more jobs than possible and new companies opening up. Now, in 2003 and 4 and 5, we were a one-horse community. We were a construction industry. And when construction stopped, we lost 65,000 jobs. And people left, and we caused us major problems. Not so this time. We have really diversified. Our industry here is just unbelievable. We got high tech, we've got military, we've got new chip plants coming in, 8 with Taiwan semiconductor building, and of course, not to be outdone, Intel's building 2 more chip plants on top of their campus. So lots and lots of things going here. So I don't think that's going to be the case. Same thing with Florida and Texas. They have a lot. But if you're in out migration states like Illinois, Wisconsin, Minnesota, New York, New Jersey, a lot of the West Coast is California lost 350,000 residents, over $8 billion in taxable revenue was left left the state of California. Those people may see some declines in prices, much more than we're going to see here. So this gives you an opportunity. If you're a first-time home buyer, go out and buy a property. Make sure you can afford it. Make sure that your job is secure. Make sure that you got good reserves. If you can qualify for $500,000, maybe you want to buy something a little bit less than that, so that you make sure that it's something that's easily affordable. But I think that that would be a really good idea for you, because I think we're going to see inflation coming on the outlying years. That's going to be fairly significant, and we're going to need to protect ourselves for that. Let me go to my final slide, and we'll finish this up. Now, I'm with West USA. I am an investment advisor. I am absolutely outstanding at this. However, we have a lot of clients that own companies and businesses. We handle their staff, we handle their employees, we handle their kids. You're welcome to call us if you have an idea for real estate and you want to brainstorm with us. You certainly can. You can reach me at michael@michaeldouville.com. And if you do that, would you give me a big thumbs up and maybe subscribe? YouTube really, really likes that, and it helps with our marketing a lot. So I'm going to wish you the very, very best. If I can help in any way, please talk to your financial advisor. I'm more than happy to talk to you and your financial advisor, your spouse, of course. And I'm going to wish you my best.